Hi there everyone, good afternoon and welcome to this edition of Closing Trades. I'm Avan Dabash and with me is Vinny Motiwala. Well, it looks like consolidation is the name of the game this Monday afternoon as we are continuing to hold on to that 19,590 mark in trade. So yes, it has been a gain of around 60 points in trade, but remember we've been confined to a very tight range. This after Friday's move, it looks like we're taking off from those levels, and those are really some of the support, the key supports in today's trading session. The fact that you have large cap banks like ICICI Bank supporting the market after the kind of move we saw on the Nifty Bank on Friday's session. You've got Reliance Industries as well above the 2,500 mark, and M&M sure is in top gear with a solid 4% gain. So those are some of the constituents that are really supporting the markets this time round. Honestly, barring PSU banks as well as the Nifty Bank Index, yes, we are holding out above the 19,600 mark in trade. It's Pharma, it's Realty, it's IT as well as Auto. So across the board, you're seeing support coming in today's trading session. The PSU banking index, though, that continues to remain a sore loser in trade. We've been talking about how a lot of the heavyweights like Bank of Baroda, SBI as well within the space, it's not been that commendable in terms of numbers as well. Looks like the street is reading into all of these factors, and after starting out as a star performer, one of the star performers of the year, the entire PSU banking space has certainly emerged as a drag, particularly in the week gone by. But that aside, just taking a look as to what's lending a helping hand to the markets this afternoon, and you've got something like Sun Pharma and Divi's Labs that's up and away in today's trade. SBI Life is in the green. TCS along with HUL, Wipro, HCL Technologies, those are some of the other smart movers. L&T too is lending a helping hand. Britannia, though, after a pretty okay set of numbers and the volume growth as well missing the mark, that stock is down about 3%, top loser in trade. SBI as well, as we highlighted, Tata Motors, Titan, Coal India, those are some of the other losers in trade. And when it comes to the broader markets as well, pretty much neck to neck with the frontliners. But lots in the news today, Vinny.
Absolutely, lots in the news today, Avan. There's a lot of individual stock that are moving in trade. And let's talk about Paytm. Why is Paytm in focus? Look at the run-up that we've seen in the stock as well. It went up as much as 11% today in trade as well, after Vijay Shekhar Sharma said that he's actually going to be buying the 10.3% stake from Ant Financials. And Financials now will, after the deal, they'll be holding only 13.5% stake in Paytm, and Vijay Sharma will be holding 19.4% stake in the company. So yes, that's on the back of a news flow, but a lot of earnings coming in. It's amidst the earnings season. We're seeing weak set of numbers that were actually reported by Venki's. A sharp fall that we saw coming in terms of the margins of the company as well as the profits of the company. That also saw a sharp decline as well. Ramco Cements, India Cements, nothing exciting coming in from both these cement companies as well. And in the chemical space, we had Alkali Amines, which reported a weak set of numbers as well. So weak numbers reported by these companies, while on the other hand, Zentech, that managed to report a strong set of numbers in Q1 FY24. Ethos, that's the watch retailer, that also managed to see a good growth coming in this time in Q1, while Keystone Realtors also reported a strong set of numbers. Let's move on and talk about Aditya Birla Fashions. Now, this one is in focus today. What we saw coming in, it's among the top losers when you see coming in from the mid-cap space as well. And that is mainly why, because we've seen Morgan Stanley, they have come out with a note which is maintaining an underweight rating and given a target price of 176 rupees per share. The top line is affected by weak discretionary demand, and that we've seen coming in from most of these retail players as well, impacting in terms of the demand. The discretionary side has not seen a good recovery coming in, and that's a concern. So that is why we're seeing Aditya Birla Fashion also today is down and out in trade, almost 4% down is what we're seeing, Avan, and that's mainly because of the fall that we've seen coming in as well.
All right, let's connect with our chartist Kunal Bothra and Nuresh Mirani joining in on the show. Nuresh, let's start off with you and get in a take on what the overall setup is for the markets. The fact that you do have a pretty lackluster move, although 19,600 is the print that we're seeing. Do you think we're likely to build on?
So, like I said in the morning, the range is now shifting. We are getting towards 19,300 as a base, 19,700, 800 on the upside. So we still have some space to go. We are at 19,590 right now. Closer to 19,700, 800 could see a pause. The only thing is we are yet to see any strong breakout or a breakdown in the index heavyweights. But at the same time, we are not seeing any change in the trend for the mid cap and the small cap indices. They continue to be strong, very close to their all-time highs. So this tells you to focus more on the stock specific side on the broader market, focus more on the mid caps and small caps till the time we are above 19,300.
Right, Kunal, coming to you, what is your view? Today we've managed, yes, we did touch that 19,600, but again that fall has come in. Naresh was also talking about it. Is it going to be more of a stock pickers market as of now, or do you think, the index is actually going to pick one side now?
Well, my sense is that the markets are going through a grind, and I think this grind would now extend for at least another couple of weeks, if not more, for the index, because we've had a fantastic last 5 months, 5 consecutive months of strong uptrend for the index. We've managed to surpass 2 strong psychological marks, or at least came back closer to that 20,000 levels for the Nifty. So we are bound to take some bit of pause, some bit of negativity on the index front. But then, this may not be a trend changing or a trend damaging move for the indices. Even if we get into another couple of weeks of sideways consolidation, most of the options data still indicates that there's been more tilt towards the writing of the call and put options, more towards a very small strike range difference. That would indicate that the expectation is for the indices to remain into a flat range. So 19,500 to 600 would be a pivot range for the index, and I would believe for the next couple of days at least we should try and hang around to this 100-point support.
Around to this 100-point support is what you're saying, Kunal. Let's look at some of these individual buzzers that are there on the back of volumes as well. We're seeing good volumes that we spoke about Aditya Birla fashion, but let's talk about REC as well. That's seeing very good volumes coming in today as well. Sharp volumes we've seen intraday high is also what we've seen coming in for REC. Other than that, it's advanced for the 4th straight week as well, and volumes are almost at 2 times the 20-day average as well. That's REC today. Also, it's buzzing and high volumes. That's what we've seen coming in for REC as well. Even M&M, yes, we did have them report their numbers on Friday. Then the con call happened as well. And today also we spoke to Rajesh Jejurikar as well in terms of their numbers, RBL Bank, what was happening on that front as well. There's a breakout that we're seeing, 7-session consolidation that's advanced for the 5th consecutive month as well. And volumes are around 2.4 times that the 20-day average as well. So good volumes that we're seeing coming in these 2 stocks as well. That is something interesting that is coming up in this space as well. Naresh, I'm going to just come to you. What is your view actually coming in on something like an REC and a PFC? And on the charts, how are you seeing that? We have seen a very good run-up, already come in for this. So what is your view on these 2 names as well?
So if you look at REC and PFC, as of now, in the last few days, the current moves are a little bit of an overdone move as of now. We just had a 4-day pause and again a fresh 52-week high and an all-time high for the stock. Could get into a divergent move and say create a short-term top in place. So the view is to keep a strict trailing stop loss, which is say for example for REC that would come to 200 levels. For PFC that would come closer to 258 levels. If it starts sustaining below that, that's the time you want to actually exit the position and maybe even look at a short. For now, not shorting the momentum. The momentum is still strong, but could be very close to a short-term top going forward is the view, but I would wait for more price action to actually take a short trade.
Move right on then, and it's Paytm that's a trending stock in today's session. Vijay Shekhar Sharma has entered into an agreement with Ant Financial to buy its 10.3% stake in the counter, and post this transaction, Ant is no longer going to be the largest shareholder in Paytm. Let's understand the contours of this deal, what it means for the company, as well as what Vijay Shekhar Sharma's holding is going to go up to. Sharad joins in with the details. Sharad?
Well, yes, an important update coming from Paytm where Vijay Sharma will be purchasing 10.3% stake from Antfin. Now, this will be for his stake in the Paytm, and do remember this is a 100% buyout would be happening from its owned overseas asset. Now, what happens is Antfin doesn't become the largest shareholder now anymore. And also this will be done via retaining no economic interest. To put it in a simplified manner, it will be done via an optionally convertible debentures. Now the shareholding pattern, how it changes is of course his stake from 9.1% of Shankar Sharma increases to 19.42%, while Ant's shareholding itself that will reduce from 24% to 13.5%. But overall, looking at the entire deal structure, there is no cash payment or pledge involved, and there will be no change in the management and also in the control for Paytm, as Vijay Sharma will continue to remain as the MD and CEO. Now, looking at the impact analysis, Antfin stake sales overhang has been completed, but do remember SoftBank's stake sale is still overhang, it still continues, and SoftBank is having roughly 9.1% stake in the company. Even from the brokerages, we have seen from Dolat Capital, they have stated that faster resolutions around the ongoing Paytm payment services will augur well for the company, and also this reduces the chance of any kind of a hostile takeover.
Basically, I would say this helps in a multiple way. This actually talks in a way that what kind of relationship and support they have from ANFIN, and from a clear business point of view, I think it takes away the risk around, there's a lot of talk about, in the past there has been talk about hostile transaction. What if ANFIN stake is purchased by one single entity and they were owning close to 25% at that point of time? So those kind of risks are out. And secondly, even from some of the regulatory challenge, if you look at their payment services license, which is pending for approval for more than 6 months now, where the constraint was also related to, Chinese ownership. So essentially those kind of challenges may see a better continuity going forward after this transaction. So it helps in many ways.
Okay, on that note, we're going to slip into a very short break. But as we go into a break, listen into what Rajesh Jejurikar had to actually say in terms of, them increasing that, buying that stake in RBL Bank. Will they be looking to increase that further 3.5% stake? What is his word on that? As well as what is he talking about in terms of the SUV competition? Let's go across and listen in as we slip into a break.
We've said we are not going beyond 3.5%. There's no plan to do that, right? So firstly, any speculation that may be there on what's the extent of deviation we may be doing from a capital allocation policy doesn't cross the 400 crores kind of thing. The second is what Anish has said, I think, is that it gives us an option in case opportunities come up in the future. 400 crores is not a high amount of money to put in a business, in a sector in which we already have a market cap of 40,000 crores plus.
Yes.
Right? So if you're putting 400 crores in today, you have an option of seeing where does that go over the next 5, 7, 10 years, or you have an option of saying it's not going anywhere, we can get out. And in any case, there could be an opportunity, as Anish has been saying, to help us learn the sector a little better in whatever way that conversation could go. In this crowded market, we've taken a very conscious call over the last 3 years in particular on the kind of SUVs we want to make. When you think about it, you may say that, if you're going to have a strategy which is very niche and you're going to have a highly differentiated, authentic SUV strategy, you actually can't get volume. Last 4 quarters, continuously, we've been number 2 by volume, over and above being number 1 by revenue market share. So even with our currently focused, differentiated, authentic SUV strategy, we are able to sell volumes and be at number 2 level in a market which, like you said, there are 40 brands. So I think pricing power will be around how much differentiation you try to bring in. And if you have a differentiated portfolio, customers will want to buy you. Certainly, we would expect high level of competitive intensity, and which is all the more reason our strategy is going to be about driving high level of differentiation, have a very differentiated portfolio, and do products which we believe go well with our brand DNA and which also appeal to the Indian consumer. So it's not like, okay, it's working in some other part of the world, so let's do that here because that's the platform we have or that's the product offering we have around the world.
Welcome back, and you're watching Closing Trades on ET now. As of now, Nifty trying to come back to that 19,600 levels, just kissing distance from those levels. But let's keep an eye out on the markets and where it's going to be ending. But to bring on board Jitendra Arora, who's the Senior EVP and Fund Manager at ICICI Prudential Life Insurance Company, to talk to us about the markets. Where is he seeing fundamentally everything moving? Jitendra, thank you so much for joining in with us this afternoon on ET now. And, I just want to talk about the broad markets first. When you look at it, whether it's the Nifty, last week we saw that 19,300 around those levels coming in. Today, trying to come back to those 19,600 levels, around those levels there. What is your view on the long-term basis for the market? Where do you see it, or do you expect it to be a bit range-bound right now?
Good afternoon. So you asked actually two questions in the same flow. One is about would you expect market to stay range bound, and what is my long-term view? And I think that's where there's a little bit of, if I may so call, divergence here, in the sense that we are very positive on Indian markets over a long time, but we still expect that in short time, which may be like next 3 to 6 months, we can see markets consolidating around current levels. Uh, uh, that period may get stretched if we see more election-led uncertainty coming into the markets, which I think will start becoming a factor at some stage psychologically as we move closer to the election cycle.
Okay, fair enough. Jitendra, hi, morning. Wanted to also understand your outlook then on the FIIs, which have begun selling quite relentlessly for our own markets. Is that emerging as a huge concern? But, you know, at the same time, one needs to take into cognizance the fact that we're not alone in this downfall. We are seeing a calibrated fall across the globe. But what's your view on the liquidity situation?
So on the FII liquidity per se, honestly, I would not call it a relentless selling per se, what we've seen. If I see the FII inflows so far, for the fiscal year, we've seen a cumulative buying of in excess of $17 billion. And last month, it was more than $4 billion of buying by FIIs in the Indian markets. On that, if they happen to sell around $500 million to $1 billion over a period of a week to 15 days, I'll accept it. Because we do see that fundamentally India remains a very, very attractive market, and we'll see these bouts of selling and buying happening by FIIs. But if I were to stick my neck out and say that how do we see direction of capital over a longer period of time, I think we will see steady FII inflows.
Right. Jitendra, I also want to understand one thing is in terms of the IT space. We have spoken about, we were expecting that recovery coming in earlier this year. That hasn't happened. What is IT now looking like to you? How do you view IT in terms of, obviously, we have the numbers that have come out for the June quarter, but going forward, what is your stance on Nifty IT? Anything that is looking attractive to you over there?
So on IT, if you see our portfolio stance, it remains slightly underweight because, again, we believe that stocks have run ahead of the earnings turning around. And I think a lot of that has to do with the fact that the flows by both FIIs and DIIs into the markets have been fairly strong. And IT still remains one of the consensus underweight sectors for domestic industry. So I guess it's simply the technical which is taken over the short term. However, we don't see that IT earnings, we don't think that IT earnings have bottomed out. Or perhaps this quarter will be the inflection quarter, the quarter gone by. I think we can see the pain continue even during the September quarter per se in terms of earnings. And from there, obviously, a lot will depend on how US economy turns around post that. There are a lot of economists on the street who are still calling out for a US recession in Q4 or perhaps Q1 of calendar 24. So if that plays out, we think that the earnings can take some more time to recover. And in that case, the market, the stock prices are still higher than where they used to trade historically in terms of valuations. So that's why we are taking a call that we need to see some amount of time correction or price correction in the stocks for them to become outrightly attractive.
Okay, fair enough. So, given that you're talking about the earnings season overall recovery, one sector that has definitely stood out like a sore thumb would be the consumption space. That volume growth slowdown is definitely evident in the kind of numbers that a lot of the FMCG companies have reported. With the high inflation, do you believe that this is going to be a bit of a stumbling block in the coming quarters? What's the outlook for the sector as a whole?
So on the sector as a whole, we still believe it's more of a defensive sector in your portfolio. So, and regarding the volume, again, this is not one of the sectors where I'm looking for volume growths of, let's say, very high single digits also on a whole. What you are looking for, mid-single digits volumes, mid-single digit pricing, and perhaps overall top line growth of somewhere around 10 to 15%, and earnings moving along the same pace. However, the stocks seem to have disappointed. And in fact, it has happened not because of the inflation. It has happened as the inflation is going away. Because what's happening is that as the inflation is going away, we are seeing that the unorganized players are coming back to the market to give a competition to some of these players, which was not happening in last 2 or 3 quarters. Levers highlighted the same in their call, and today Britannia also highlighted the same in their call. So I guess we may see that period of adjustment happening for the organized sector for some time. But once that plays out, we believe that these are very good enterprises who generate very high ROEs and still have a steady earnings growth trajectory. I'll for the long term, I still remain an investor into some of these stocks. However, one can choose tactically to remain underweight in the sector, given that we are seeing some kind of slowdown here, and also the rural recovery is not likely to happen so quickly as we think.
Jitendra, we've spoken to a lot of NBFCs, especially the ones that focus more on the MSME side or the microfinancing side. They keep saying about, that good demand. They are seeing good trends coming in there. Anything attractive that you're finding in these names, 5-star or Ugro Capital, anything on that front that you find attractive, or overall for that sector that you're seeing something interesting?
So I guess what's happening in microfinance sector is essentially we are seeing that the credit cycle is very, very benign. And given the fact that some of these companies did not have huge disbursements in FY21 and 22, the disbursement pace started picking up in FY23 and continues to be very strong in 24. So they are cyclically in a very, very good spot. And the valuations for the sector also remain attractive. So I guess one can find names where they have conviction and these names can deliver for them for some time to come. So I find the sector attractive as a whole. However, I'll not be able to discuss on the individual names here.
Fair enough. And Jitendra, before we let you go, just walk us through, your outlook on the entire manufacturing space, because a lot of experts are alluding to this manufacturing renaissance of sorts that's playing out across India, and how a lot of themes are likely to be big beneficiaries within this space. Would you also be jumping on the bandwagon?
So in some ways, we have been on that bandwagon for some time. So if you see some of the key EMS players, they've been part of our portfolio for quite some time. And I believe that in manufacturing, obviously, India still has a lot to catch up with a lot of economies. And we can see that government is providing a lot of thrust on that side, with the most recent being the PLI on the IT manufacturing. However, these things take time, as we all know, because first is to move the manufacturing of the end product, which will start with assembly. Then you will start getting the components to be manufactured into India. So that whole ecosystem, the creation of that ecosystem is a very long drawn process. But we believe we made a very good start in that respect. And the focus of the government there is completely unwavering. So to that extent, I will agree with a lot of people who are saying that perhaps manufacturing is one theme which is here to stay in India for some time.
Okay, Jitendra, thank you so much for joining in with us this afternoon on ET Now, giving us an understanding in terms of the markets, your views on different sectors as well. Thank you so much for joining in with us. But let's move on, and Kunal, coming to you for your closing trades for today. What is it on your list?
Well, that's Bajaj Finserv. Bajaj Finserv is something which looks fairly attractive. In fact, the stock has already corrected more than 10% in the last 2 weeks or so. And I think now at 1500 or sub 1500 level, I think it looks very attractive for a contra play. Would look out for a decent bounce of at least 4 to 5% over the very short term for Bajaj Finserv.
All right, let's get in, Naresh, your recommendations, your closing calls.
So that would be a buy on Bandhan Bank. The stock has been showing a lot of relative strength, slowly moving up from 220 to 230 levels, trying to cross the highs which it made around the last quarterly numbers. So sustaining 230 would be a quick move towards 250, 270.
Okay, let's move on. And Kunal, Nifty has been in the range. Why is this market in the range? Give us an understanding on the technical front, on the technical data. What is it showing?
Vinny, we discuss a lot about how the markets break out, in a trending up manner as well as break down. But the analyzing sideways market is also another way in which we anticipate that which are the best strategies which can work in this kind of a market scenario. And the best way to understand a sideways market or to try and project is look out for the option writers and how the option writers behave. Now there are two important option writing strikes which makes a lot of sense in this kind of a market. One is the 19,500 put writers and the other is the 19,600 put writers. In fact, throughout the day, right from the start, in the morning, the extent of put writing at the 19,500 strike was almost at par with respect to 19,600, which means that there's been a good battle between the bulls and the bears which is going on an intraday basis, and no one is ready to give away these two important critical support points for themselves. Now if you add back the premium, the range which we define for the index is at 19,445 on the downside in the next chart which you will see, and the upside is 19,665 for the index, which means broadly for the next 2 days we would expect that the Nifty should be into this very tight band of 180, 190 odd points for the index. In fact, the graph or the line chart would actually show a significant movement of how the index trends have shaped up on an intraday basis. Right from the start, the 19,600 put call writers were in a higher degree of conviction that the markets may not probably surpass about the 19,600 levels, and then till 11 or till 10:30 in the morning you saw the put writers making a comeback. So the battle between the bulls and the bears is actually going on between the markets throughout the day, and that's the reason why the markets are indecisive or there is a lack of trend. So classical way of how do we spot the indices remain into a sideways range. The range, as you can see, is 19,445 to 19,665 for the index.
All right, there you have it. That's the overall setup when it comes to the technicals and the kind of range as well that the markets could likely be confined to. Tell you what, we'll take a very short break right here on Closing Trades. Be right back with more. Back with Closing Trades right here on ET Now, and touch and go with the 19,600 mark, but there's lots of names firing up the screen within the broader markets. HFCL 13% now on last count. This stock is really moving from strength to strength. Do remember last week there were some orders that the company had bagged from Reliance Retail. No real trigger right now, but the stock is up and away in trade. ITI is another one that's scaling new peaks, and the stock is holding out with a solid 9% notch up. Aircon International, I think, was a star in the last trading week, and today as well that movement continues. You've got something like a Sterlite Tech as well that's up and about in trade, and REC2 has gained close to 6.5%. Let's connect with Gurmeet Chadda as well, who's joining in on the show. Hi there, Gurmeet. Lots of opportunities within the broader markets. I was just highlighting some of the buzzers in trade today, but why don't we pick out the defense and the railway space, because that, after getting off to a very heady start, seemed to have fizzled out a little bit. Do you think that the party is over when it comes to this space, that one needs to be just very selective when picking out names?
Yeah, latter one. I think the stocks had run up quite a bit. And defense, you can't evaluate quarter on quarter. The order book plays out over long periods. In some cases, could be 8 years, 10 years, and they have different milestone payments. So, probably a lot of good news got upfronted in the price. Was visible in some of the PSUs trading at 30, 35 multiples. So I think some consolidation happening. And you got to be more selective in terms of, because the market probably wants results every quarter, and that may not come through. The order book can be lumpy. So be more selective. I think while the story remains, I think the bigger story there is import substitution. And if you dig deeper and get into some smaller ancillaries, I think there's still some opportunities. So a lot of tie-ups happening in terms of IP transfers on the import ban, which is around 491 odd defense items which have been banned. So you got to go product-wise in terms of drones, ammunition, hand grenades, Pinaka rockets, etc., and then figure out. I think for now, probably the prices look a little stretched in most pockets.
Right. We're seeing those numbers coming in for Barbecue Nation as well as of now, and seems like a weak number that is reported by the companies. Revenues are down, margins have seen a sharp contraction as well, and the stock price is falling given that we've seen the weakness coming in numbers as well. Naresh, do you have any view on Barbecue Nations? How is that looking like on the charts, or would you look at something else in this QSR space?
So Barbecue Nation looks interesting on the small term time frame. If you look at it, the stock has started seeing volumes over the last 4 sessions, corrected quite a bit from the top, almost from 1900 odd levels down to 700. Stock can see a move towards 800, 850 also, but it should be a slow and steady move. The whole QSR space, I like Restaurant Brands India Limited. That's seen good volumes over the last 2 weeks. The stock is on verge of a breakout about 120-22 levels, so that could be the best one I would go with on a technical chart basis. But overall, we are starting to see some bit of recovery across the board, whether it is barbecue, whether it is Jubilant Foodworks, which has been on a downtrend. So the trends seem to be changing, but Restaurant Brands would be the top pick for me.
Okay, fair enough. Meantime, Gurmeet, let's also get in your take as to what the outlook is within the entire pharma space. Do you believe that there is an opportunity to nibble into some of these stocks, or expensive valuations would deter you to a certain extent?
Mixed actually. Pharma is quite a big sector. It's not one theme. I think if you recollect, we had this conversation that IT and pharma looks the most hated space about a couple of months back. And since then, I think pharma has taken off. I think the more action has been in branded generics and also some of the US focused companies. I think Cipla reported a beat on all fronts, last week on numbers. Growing both in US, led by Revlimid, and Indian markets. Indian markets, both their branded generics, trade generics, and consumer health portfolio all did very well. I think with this, probably some action on the Pithampur plant now, the launch of Advair can get delayed because it's OI status, which means they need to clear compliance. So that could be a bit of an overhang. And plus, there is this news on promoters looking to offload equity. So we'll keep a watch on this space. The stock is still 20 to 23 times, so it's not really very expensive. Mankind anyways had a very good stellar listing. I think probably the focus is now shifting to the CDMO space, which has been an underperformer. So we've seen some uptick in DVs, Laurus, Newland especially has done very well, made a new high. And this is the space I think which probably looks the most attractive to me from a long-term perspective, because the business is very lumpy. You have a lot of molecules in phase 3. Rejection rate in phase 3 is still high, but the size of the opportunity is pretty good. So if you remember when Molnupiravir happened, the top line of some of the major companies went up by $100-200 million a quarter. So that's one space which excites me. Also, selectively in hospitals, we like that space. I think it's at a cusp of a cyclical recovery there after a long time.
Okay. Hospitals also seeing a cyclical recovery, and Gurmeet does like that space. But let's keep it with that pharma side. And Jubilant Pharma is on the dealer's radar as well, and on the back of some DII buying. What are the other triggers? Sharad is joining in with us to give us more details on that. Sharad?
Well, yes, in focus we are having Jubilant Pharma, and what we are hearing from the dealers is the institutional buying coming in from the domestic side. Now, apart from this, the volumes also of the stock have gone up almost 4 times its 20-day average. And in today's session itself, the stock went up above its 50-day moving average. Apart from this, the key investors already invested in the stock include Abacus Group and also Rekha Rakesh Jhunjhunwala. Apart from this, the stock itself has gone up almost 45% seen from March lows itself. But now going ahead, what are the key important triggers which is we're watching out for? And of course, do remember last 2 quarters have been weak on the performance front for the company. But going ahead, the CDMO business operating leverages that is expected to kick in by the second half of FY24, while the overhang of the key managerial person exits seems to be over. That's what the street is estimating. And lastly, they're also expecting that the improvement in the inventory levels would augur well for the company.
Okay, thanks very much for those details. Meantime, Kunal, let's also get in a take on the charts. What's going on with Venky's India, and have you had a look at the charts of a JK Tyre? We discussed it earlier this morning, but now down 5%.
Yeah, I think Venky's India was a case in point of the stock being a bit stretched in terms of the market rally. The last 1 month itself, the stock moved up from 1700 to 2300 mark. The volumes at the point when the stock was at 1700 levels, the first breakout move for Venky's India was higher as compared to the volumes which the stock had seen in the last 2-3 days when it was trading at 2300. So that itself was probably an indication that the stock is moving upon decreasing or lower volumes relatively, which means that very soon the stock would get into a mean reversion, which we've seen today for the stock price. So Not surprised with the move for Venky's India on the short-term basis. In fact, my sense is that the stock should correct by at least another 100 rupees before it retraces back towards the major moving average, the 200 moving average, which I think is placed at 1780, 1800 mark.
Okay, Gurmeet, let's talk about these new age tech names, right? Last week we had Zomato that reported a profit. Now we are understanding, obviously, in the unlisted space, that is Meesho, that's an Indian startup, also is reporting a profit for the first time. We've seen a run up coming in, whether today in Paytm also because of the news flow coming in. Last 1 year also, these companies have started seeing, last 6 months specifically, they've started seeing a decent up move coming in terms of the stock move as well. What is your view on these new age tech names? Where do you see them moving now?
I think both things have helped. I think one, some of these companies, including Zomato, Paytm, PB Fintech, I think the glide path to profitability guidance has been more or less met as per the market expectation. In fact, Zomato reported profit 2 quarters ahead of the guidance. Paytm also, if you see, the payment business doing pretty well. They're adding they added 11 lakh plus merchants on the subscription services. The users on the app are up 22-23%. Also on the credit side, I think they continue to do well. They have this model where it's called FLDG, which is first loss default guarantee, where you co-pay right to the main lender, which is the bank and BFC, which makes that's where the focus is on lending, reduces balance sheet risk to a little bit, and even the commerce and cloud business seems to be doing okay. So I think if some of these companies can demonstrate, it's too early to say, but once you are profitable, suddenly you will be asked to trade on a PE earning multiple, which again will look very expensive. So probably, if you are a high risk investor and you are in it for the longer haul, because a lot of these companies will probably make, if they survive, some of them may not survive also. That's why I'm asking you to make a basket approach, to have a slightly longer view, because probably the bigger story will play out once the numbers really start multiplying geometrically once you reach, reach an inflection point. So we track some of them. I think we like PV Infotech. I think it's a marketplace, which is the most asset-light model amongst these new age companies. The insurance premiums are going up. The lending marketplace, which is paisabazar.com, seems to be doing well. And I think a few quarters from now, hopefully, should be a bit of positive. That's one pocket we like. But as I said, Jio Financial Services, Poonawalla, Bajaj Finance, they are as new age as some of these names. So have a more wider perspective, and maybe you can, if you are a high risk investor, allocate a small portion through a basket approach.
Okay, fair enough. That's the approach to some of those new age tech stocks. Meantime, Naresh, comment on the charts of an M&M up and away in today's trading session, and you've also got something like an ABB and Siemens that are active.
So M&M still looks interesting. The stock did a retest of that 1400, 1450 mark, which was the last breakout point, as well as the cluster, and slowly and steadily the stock could again go back across 1600 levels. Remains a buy on dips below 1500 to 1450 zones. Positive on the stock as such. On the other end, ABB Siemens are a little overdone in the short term in terms of the stretching of the rally. So would be on avoid as such. Would still focus on L&T in the capital goods space.
Right. Kunal, I'm going to come to you. We have spoken about ABFRL today in terms of volumes as well. Yes, there were numbers as well which came in. But you have spoken about ABFRL before as well. You do like it. Now, as of now, when you're seeing a bit of a fall coming in today because of its numbers, would you say something like this would be attractive to enter into this, or is it still a positive side that you're looking ABFRL with?
Well, yeah, I think it's a very positive sign for the stock because, after such a sharp sell-off from 350 levels, I think mid of 2022 and the second half of 2022, towards the point when the stock had come down to, I think 180, 185, that was the low which the stock had made. We saw multiple phases where the stock went into a classical sell-off, making a pattern of lower highs and lower lows. It's just that in the last 2 months, 3 months, that the sell-off had been arrested and the stock had shown first signs of recovery for itself, breaking past about the first strong psychological resistance of 225 mark for ABFRL. So now with this 2 days of sell-off, in fact, I was actually looking at the data in terms of open interest, that whether there is any meaningful change in terms of the open interest, strong short built up or unwinding of long positions, and there are no major or critical signs in the last 2 days which has happened for ABFRL stock price. That indicates that this could probably be a terminal sell-off for the stock price. So I would actually believe that this could be a good level to buy the stock for someone who has a time frame of 6 months to 1 year. I believe that the sub 200 mark could actually become a strong base for ABFRL over the next 6 months to 1 year, and you should see the stock gradually recovering. So with a potential target of 250, I would probably suggest a buy on ABFRL and with a time frame of 6 months to 1 year at least.
Okay, that's the view coming in on ABFRL. But let's move right on then and focus in on Hindalco, all set to come out with its numbers. What exactly is the street expecting? We've got Ashesha here with more details. Ashesha?
Well, yes, we are expecting muted set of numbers from Hindalco this time around. Lower prices on the London Metal Exchange and lower profitability from their copper segment is expected to drag down profitability. Prices on London Metal Exchange of both aluminium as well as copper declined by 5% each on a sequential basis. As far as numbers are concerned, standalone revenue is expected to come in at about 17,750 crores, which will be a downtick of 11% on a quarter-on-quarter basis. Margins, meanwhile, could come in at 6.9% versus 8.9% that the company had reported in the previous quarter. As far as the segment-wise performance is concerned, aluminium EBITDA could fall by about 5% on a sequential basis due to lower aluminium prices. Meanwhile, copper EBITDA could decline by about 25% on a sequential basis due to shutdown of their plant as far as their copper operations are concerned. Remember, Novelis, which is Hindalco's wholly owned subsidiary, reported its numbers a while ago. The management commentary from Novelis was quite positive. They say that the worst is behind us and the worst of destocking is behind them, and that perhaps EBITDA per ton could improve to over $500 per ton in the fourth quarter. But all in all, from standalone numbers, we are expecting muted set, lower realizations and drag down from copper profitability is expected to remain muted this time.
Thanks, Ashesha, for those details. In fact, Coal India as well set to come out with its numbers. What exactly should the street be working with, Ashesha?
Well, yes, we are expecting muted set of numbers from Coal India this time. On a year-on-year basis, EBITDA is expected to fall on account of higher wage provisioning and lower e-auction premium that the company experienced in the quarter gone by. Blended realizations, meanwhile, could fall by about 3% on a year-on-year basis due to lower e-auction realizations that the company experienced. Margin expansion, meanwhile, could come in on a sequential basis, and that is on account of a one-off adjustment on wage provisioning that the company had done in the previous quarter. As far as consolidated numbers are concerned, revenue is expected to come in at about 35,100 crores, which is a decline of about 8% on a quarter-on-quarter basis. Margins on a year-on-year basis are expected to contract a tad bit. They could come in at 27% versus 35% that the company reported same time last year. As far as e-auction trends are concerned, e-auction realizations are expected to fall both on a year-on-year basis as well as on a sequential basis, but e-auction volumes are expected to rise by about 20% on a quarter-on-quarter basis. As far as key monitorables are concerned, further provision for increase in employee costs that the company could probably do in this quarter or in the coming quarters, guidance as far as their capex is concerned, and pricing trends of both e-auction prices as well as FNA prices will be the key monitorables. All in all, we are expecting muted set of numbers from Coal India. Margins could expand on a sequential basis, but revenue could see a dip of about 10%.
Okay, Ashesha, thank you so much for that. Surely keeping an eye out on those important names and the numbers for tomorrow as well. Let's move on, and Naresh, coming to you, what is your BTST trade for today?
So going with two banks, first is the buy on IndusInd Bank, showing good strength over the last two sessions, close to a breakout of 1430, 1450, stop loss at 1395 and a target price of 1440. Second is the buy on Bandhan Bank, good relative strength over the last two sessions, stop loss at 227, target of 236.
Let's get in your BTST trades, Kunal.
So two buy calls. The first one is from the mid-cap space. Buy on L&T Infotech Mindtree. The stock looking attractive, confirming a swing breakout today on the charts about that 5,000 mark. So targets of 5,200 for L&T Infotech Mindtree and stop loss to be kept at 49.80. And Laurus Labs is something which I had recommended at 350 odd mark. Now at 400 plus levels, it looks all the more attractive, confirming a swing breakout on a higher degree time frame, breaking past about the 200 moving average quite comfortably. So would suggest a buy. 425 could be a revised target from current levels, and stop loss could be kept at 385 for fresh trades.
Gurmeet, your take on M&M and the quarterly performance. Today we also had the management right here with us in our studios, and they were pretty confident about growth continuing. Brokerages as well are upping the target price, given the fact that they're talking about a strong commitment to capital discipline continuing. What's your sense on M&M within the entire auto basket?
I think a very strong performance got a little overshadowed by this, news around the stake in RBL Bank. Just to purely focusing on performance, they continue to do well. In fact, I was very positively surprised with the margins on the auto segment, the SUV, where they're doing. It's now upwards of 7.5%. Also, they're clocking like 35,000 units of wholesales a month, and they're talking of increasing it by another 10,000. Very good order backlog of almost 2.75 lakh units already, so that continues to do well. The farm equipment space again, in fact, tractor, their peak margin was actually better than pre-COVID, more than 18.5%. So consolidated margins look good. Still not expensive at 15-16 times earnings on FY24. And if they continue the capital discipline which they spoke of, I think the stock has more levers to grow. Also, the EV business hopefully should unlock more value as they continue to invest in it. So I think that's another segment I'll be watchful on. So pretty constructive on M&M.
All right, let's get in a queue on the charts as well. And Kunal, what's standing out within the auto space?
Well, I think as of now, not too much of a movement as such in the large cap stocks on the auto pack other than M&M. I think Tata Motors, for example, the stock has been sideways. Hero MotoCorp has gone through its fair share of correction. Maruti at 9,600, 700 pivot range. That stock has been not showing too much of movement on the upside. I think it's been stuck into this 100-point pivot range for itself. Bajaj Auto has also corrected, I think, by some 200 to 50 odd points in the last 2 weeks, now at 4,700 approximately. So even that stock has gone through a mild correction. But the volumes, the open interest figures are not showing any kind of a trigger for these stock prices for us to anticipate that which could be the next stock from the auto pack which could lead from the front. In fact, even on M&M, I believe that the move today is more based on short covering as well as filling of a major gap for the stock price. We'll need to see further evidence that the stock surpasses the levels of 1550, 1600. If that happens, then we can expect a much bigger up move for M&M. But I would probably categorize this as more of a short covering move. So not too much of a major cue coming across from the large cap auto stocks particularly.
Right. Gurmeet, I want to understand one thing is in terms of these chemical names, which have reported the numbers. We are seeing weakness clearly coming in all these names in Q1. We know the pressures coming in terms of the China dumping, the pricing pressure there, high cost inventory. But, now is it something that is starting to look attractive or, maybe this pressure, because some of them are saying that second half of the year we'll start seeing a recovery. So what is your thought on these chemical names? What is your view here?
So, there was over-exuberance in this space a year back. Everybody was a specialty chemical company. And I think end of the day, it's a commodity business for most players, which is cyclical. And that's what's playing out. I think in few pockets, there's a lot of negative news is in the price. And some of them valuations are very, very reasonable. While I believe there will be another quarter, which will be soft, a quarter or two maybe. And the China reopening, we don't know much, how much China factor plays out in this, because in a lot of chemistries, China is extremely important. So Tata Chemicals, for example, trades at 12-13 times, reasonably, expensive. They have obviously cut soda ash prices now twice, so that made the stock under little pressure. But overall, it has agrochemical play. There's a bit of EV play through what they are making for the batteries, and the larger portion, of course, is soda ash. We also like Apotex. I think that's good lineage. Is into synthetic rubber, etc.